You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back to the option block, everyone's favorite. I know it's my favorite, hopefully it's yours. Bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, some education, some of your questions, a lot of unusual activity, and then, sprinkle in some earnings and some other fun stuff for this time of year. Stir it all together with the peek into the future. And you have the delicious, delicious porridge that is the option block. The Goldilocks porridge, if you will. Not too hot, not too cold, just right. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. Lots of shows for you guys to check out. Maybe This Week in Futures Options, maybe the business show, maybe volatility views, or, of course, all of your favorite archived episodes of the option block. Easiest place to find all of that goodness, the mothership, the flagship, theoptionsinsider.com. While you're there, maybe you click on an article or two, maybe you read a headline, maybe you sign up for a newsletter, whatever you feel like doing. The choice is yours. And, of course, when you want that to mainline that radio straight into your ear holes, into your veins, then you click on the Insider Radio Network tab, and your journey has begun. Of course, you can also get it iTunes, TuneIn, Stitcher, so on and so forth, of course, via our mobile app, which is available on all the platforms out there, including iOS, Android, and the Fire OS. Almost as popular as Pokemon Go. All right. And joining me on the old program today, of course, we also stream it live, Mixlr, Mondays and Thursdays, 3 p.m. Central, 4 p.m. Eastern. So if you are so inclined and you got some time on your schedule that time of day, join us. We'd love to hear and see you guys in there as well. And joining me on the old program today, starting off, let's start in order of proximity this time. Let's start in the realm of all things boating along St. Charles, where we are joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
And I have yet to see Pokemon in our town, so I question the legitimacy of that game.
You have not found a single Pokemon. Well, that's because the hamlet that is St. Charles, the Pokemon have not invaded here yet. But I was in Naperville last weekend, and I saw they were there en masse. So they are out there, and they're certainly down here in downtown. They're everywhere you look. There's kids battling for Pokies. But it is an impressive phenomenon, to say the least. We were at Millennium Park last weekend, and just seeing the giant Poke Gym there and all the kids battling and changing hands, and the groups of kids doing the Poke battles and all that other fun stuff. It's something to see. If you haven't been in a big city recently, go check it out. It's kind of interesting. But speaking of big cities, let's flip the script completely and go as far out to the far east corner of the coast as we possibly can. Almost out into the ocean. Right before you get to the ocean, you stop, and that's where you find the little village hut of the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program. I'm guessing there are no Pokemons invading the small little hamlet of wherever we are out there in Maine, sir.
All I can say is no, there aren't. There are no Pokemon. I'm sitting in front of my hut, smoking a corncob pipe, watching the lobsters swim by. That's basically all the excitement. But you know what? I wonder. I think the Pokemon craze is good. Maybe people will have a little more fun together, not get all so angry all the time about nothing. So
Yeah, there you go.
I like
the
Pokemon craze. Let's chase the little, let's chase the little chubby thing with the long ears. What the heck? Let's go for it.
I like that. Burn off some of that rage out there, some of that faux rage, and turn it towards chasing some Pokies, which are perhaps a little bit more harmless, which is fun. Of course, you want some faux rage? Stay tuned to the show. We got some coming for you a little bit later. But first, we got to get into it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down more than just Pokemon Go, even though that is pretty fun. Got to catch them all, after all. But no, this is, of course, the portion of the show where we break down what was moving, what was shaking in today's market activity. Bit of an update on the old street today. Most of the major indices closing pretty firmly to the north, not as aggressively as we've seen in days and weeks past, but it's not a bad day overall. S&P up about 0.6 of a percentage point. The Dow up a little bit more than that, about 0.8, and the Q's right around that same level as well. And S&P having looks like about a little 10 to 11 handle range on the day. So compared to what we've seen recently, nothing too earth-shaking. Bix Cash, of course. All this upside love heading down to the south, hitting about the 1280 point today. So interesting stuff. So much for our floor of 13.5. But we'll get to that a little bit later. But first, let's dive into what caught our eye. Aside from all those Pikachus running around and everything else out there, that's pretty much the only Pokemon I know. So that's the limit of my knowledge. But Uncle Mike, Pikachus aside, what caught your eye in today's activity, sir?
Well, I have to say it. Never has there ever been a better day in the entire history of the entire stock market to sell than today. We do have new all-time highs today, so just always be aware of that. With that being said, I was actually given a new nickname by one of my clients, actually, even after the show on Monday, and that I got long some deltas after Monday, as promised. Just dipping the toe in the water, but the client apparently thought that we may have been at a top, maybe not, whatever the case may be. But he had said that this could be a top, and the way that you are, Mike, you are officially Topless Mike, thinking that the market will never top. So I guess that's one of my new nicknames given by one of the clients, Uncle Topless Mike. But anyway, with that being said, a couple things that did catch my eye today. Number one, of course, the fact that we did make new all-time highs again. Number two, I'll let Andrew comment on the VIX, but we are below the 13 level. But the other thing that caught my eye is that now we're starting to get a little bit selling in the bond world. TLT is actually down 1.5% today. That kind of makes you think a little bit when nothing was happening in the bond world, but now we actually, another new all-time high, we actually have some downward movement in the bond world. The other thing that's catching my eye that we'll talk about, I'm sure, today, earnings, Alcoa knocking the cover off the ball a few days ago, as well as JPMorgan. Things aren't necessarily as bad as they thought they were going to be with them. So we are in earnings season and very excited to talk about actual companies instead of the other thing that we talk about that I'm not even going to talk about.
There you go, Uncle Mike. And listeners may have noticed some connection issues. Uncle Mike's too busy using his bandwidth to catch all of them Pokemon that he claims are not running around St. Charles, Illinois. So while we fix his issues, listeners, we'll turn to that land of high-speed internet, the Duchy of Maine. Rock Lobster, what's cooking in your neck of the woods, sir?
You know, I've realized why my internet connection is always so good. And you know the reason?
Because no one else is using it.
I'm the only person in Maine.
You're on a DSL line of one.
I actually have this high-speed Comcast line. It's quite impressive because I'm the only guy that's using it. I get great customer service, by the way. I'm the only person in Maine.
You're the one guy who's getting his money's worth on the internet, getting your speed you actually pay for because no one else is on your, literally sharing it with you. It's just you.
There's just nobody on my road. I have this huge cable all to myself.
When it says that maximum speed you might get, you're getting it. The rest of us, it's just a pipe dream.
They actually are going to start using me on the commercials. See, look at his speed. Look at how fast he is. He's in the middle of nowhere, but, you know, he gets the fastest speed.
It'll just be Andrew thumbs up in the commercial and saying, I love my internet.
I know. I love my internet speed. Do you? So what do we have? And I will concur with Mike on there. They finally shook the bonds loose. So it's funny. I had an interesting discussion with a client of mine about trading, and the market, the stocks the market hates uncertainty. Stocks hate uncertainty. And okay, the British are going to leave the EU, and the more it sounds like they get more certain about leaving, the vote's gone down, but okay, we're getting out now. And the market there has reset. The pound got pounded. The UK stocks are down, 10, 12, 15% or something from 2 weeks ago. They're still kind of in the basement. They haven't really recovered a bunch. All of the big EU banks that had exposure are still down there, but they're not as low as they were, and the vol's not as low. So it's kind of the post-volatility grenade. Like I said, the volatility is like a grenade. It goes off fast, and it kind of slowly, you can't really put it all back into the grenade. It takes a while. And I think that's what we have right now. They're sort of letting the air out of the balloon. And the jobs report kind of started the good news, and it started to take the air out of VIX. What I am amazed is actually VIX, I think, is too cheap, because the thirst for upside is, we're kind of opening up like 0.5%, 0.75% per day, and then moving. So, you string together these sort of 0.5%, 0.75%, 1% moves, and all of a sudden, buying 9% volatility at the money is pretty cheap. So I would just, I would caution people, VIX is low, but, it's hard. They're not charging a lot of money for at the money volatility at this point. I don't know how high we can keep going. I guess I'm assuming we pull back at some point. But for right now all of a sudden we have some earnings now that the banks aren't paying massive, fines anymore for what they did 8 years ago. They're making some money even in a tough interest rate environment, and probably better risk control. Everything's a little tighter, getting a mortgage a little harder, all that kind of stuff. So, but vol itself, I would say, is the VIX cheap? Yes, I think it's going to be very hard to sell options in this environment. At Option Pit, we've done much better buying options the last couple of weeks than selling them by. It's not even close, the margin. So, you do what the market gives you. And right now, options are cheap. So stuff like time spreads and other things like that are doing a little better than the average bear. That's all I'm going to say on that. So, but VIX in the 12 handle, it's hard to believe, and I'm hard to believe I'm saying this, but it would not surprise me to see a 12 handle close for the July cycle. When, as you recall, the July cycle was just, I think, a week and a half ago, was trading over 20. So that was
a different world, sir.
It was, but it's the market is just, they're taking the heat out of all of that stuff. And ultimately, volatility goes up when I think it's two directions are possible. And right now, they're really not looking at the downside anymore. They're looking at just the upside. So that's what we got. But, good bank earnings, there's nothing wrong with that. There's nothing wrong with banks making money and, businesses making money, because that's better for everything else. So, being a bull's fine. There's nothing wrong with that. So, and on we go. But as it stands right now, real earnings growth is going to fuel everything else. And if you haven't noticed, oil has peeled back from its recent highs, and stocks have not cared one whit. So maybe oil somewhere between $40 and $50 makes everybody happy. At least, the industry can kind of survive on that. They can't really thrive, but they can survive. And so, you know what? People can handle survival for the oil industry. That's what it looks like.
Speaking of industry surviving and perhaps not thriving, we don't like to get too political here on the show because that road lies ruin. But it seems like all the big stories kind of dominating a relatively quiet day in the market today. This earnings season, but not really a lot of earnings lighting it up yet. We're all coming out of the political realm when it comes to finance in particular. Seems like the dueling proposals out of the Democratic side of the fence. Seems like it always comes from that side of the aisle for the renewed calls for a transaction tax. We heard a lot of this coming out of the Sanders camp, tax all those fat cats on Wall Street, et cetera, et cetera. Seems like Rep. Peter DeFazio out of Oregon is trying to bring that to fruition. He's bringing the old school, just kind of taxing everything across the board. He just calls it 3 basis points on financial transactions. He says a move that could generate $417 billion over 10 years. So that's the kind of thing that you just have to kind of just chuckle. Your typical person with their 401k is not hurt by this tax, which is, I think we could take issue with that. But then coming out of the actual presidential candidate there, Miss Clinton, she proposed, I guess what you can call, I guess today was dueling transaction tax day. I'm not sure, but she proposed what I guess you can call a little bit more nuanced version of that. It wasn't just the blanket slam them all with a bunch of different basis points and kind of let it all sort itself out. They actually proposed what is effectively a transaction tax on canceled orders. Which is kind of interesting. It goes after, obviously, what people are terming a lot of the HFTs, who are flooding the market with a lot of orders that they never have any intention of actually trading on. It's just more to cancel them and put new ones in. So, we can make a lot of arguments for that one, too, that any sort of really these kind of unknown taxes at the end of the day is just going to open up bid-ask spreads and really just hurt everybody at the end of the day. But still, I guess maybe she gets a half a point for being somewhat more nuanced than the other guys who I believe they wanted. I think they were calling for a bunch of different basis points. It was kind of varying by product there with feeling the burn, but still interesting stuff across the board. So who knows? After this thing seems to kind of rear its ugly head every now and then. Of course, there's talk of Hillary picking Elizabeth Warren as her running mate. If she does that, then this thing is definitely going to at least become a hot button issue because she's kind of made her bones on going after the street and kind of trumping this transaction tax. Mr. Rock Lobster, I know you're kind of a hardcore libertarian out there in Maine, so I'm sure this stuff sits very well with you, sir.
Yeah, you know what's funny is I just saw The Big Short. I know I read the book, but you see the book, and really ultimately what you really need is the over-the-counter market, over-the-counter derivatives market, which is huge, needs a central clearing function, just like the OCC, right? The OCC clears contracts that literally can go from value from 10 cents to $25. Okay, it's functioned very well for, I don't know, 25, 35 years. They figured out a lot of the details about margin, clearing, and everything else, right? And still, 8 years later, there's no centralized third-party central clearing mechanism for over-the-counter derivatives. So what I would say is, instead of wasting all our time with this stupid tax, right? They want to tax the HFT, the high-frequency guys. That's fine with me. I don't care. I've got no love for those guys either, right? But if you want to fix the system, create a transparent system. So, and again, they're wasting time on stuff that actually, everybody always tries these transaction taxes. Europe keeps trying them, and it always ends up being like an awful failure. I don't see why we keep trying to do stuff that we already know doesn't work very well. But hey, what do I know? I'm just an old option trader guy.
But it sounds so good on the stump, kick those fat cats on the street. And they told us, the guys told us it won't hurt us in our 401k. So I guess that we should trust them, right?
Exactly, because you know what? They've been trying to get money out of 401ks for a long time. And I think they're going to keep trying. I still think that bums out Congress. They go, well, if we can just get all that 401k money, we wouldn't have any more problems with the deficit anymore. We'd be good. All of our citizens would be broke, but hey, it's okay because we'll take care of it. Yeah, no, I don't think so.
Lovely stuff. Uncle Mike, I know you don't like to get political either, but just looking at it from a pure financial perspective, and you, of course, obviously overseeing a lot of accounts who have a lot of retirement accounts and, client accounts with you who are looking to safeguard their retirements. What are your thoughts here on these dueling transaction tax proposals? One perhaps less onerous than the other, but both still looking to make some inroads here into taxing the markets in new and perhaps interesting and or frightening ways.
I think the idea of trying to tax transactions as a way to generate tax revenue consistently, or fix a failing financial system that needs more regulation, is the equivalent of proposing to mow a 10-acre lawn with an electric hair clipper. It's a mess all around. It's not going to work, and it's foolish to even talk about, I think. Reason being is that, let's say we have this tax on transactions. That's going to motivate me as a manager to do less transactions. And by doing that, you're right, Mark, it's going to raise the cost of trading. It's going to create wider bid-ask spreads. It's just going to be foolish all around, I believe. And by doing that, even if they have this tax on it, the fact that our clearing firm, TD Ameritrade, will have less DARTs, which are Wall Street gibberish for trades, so to speak. And because of that, they're going to generate less revenue, and they will pay less in taxes all around than what they were paying to begin with, because they're generating less revenue. Thus, they'll be firing more people because they can't keep everything on the books. Now, I understand that I'm a very small fish in a very big pond, but I'm not the only one that's going to be thinking that way. There's people with many, many, many billions of dollars that would think that way as well. So I think it's a royal mess to think that that's going to solve anything. And I guess if anyone should know about trading frequently and making money, maybe it is Hillary Clinton, because she did make some money in cattle futures back in the day. So maybe we should listen to her. I don't know.
She is one of the world's greatest and most celebrated cattle futures traders, listeners. And we'll do some more work here as we shift on into the old odd block to tweak Uncle Mike's settings so we can hear all of his pearls of wisdom as we keep on rolling, listeners, into that part of the show where at least Andrew and I, we'll see if we can get Uncle Mike as well, at least Andrew and I bravely foray into the dark recesses of the options market, because it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the Odd Block, the portion of the program where, like I said, we kind of take a nice stroll through the dark side of the options business. I'll kick things off with a name we talked about a few times over the past few months or so. This is ConAgra Foods Inc., ticker symbol CAG, C-A-G, closing today, pretty much unched on the day, $48.10 is where it went out. This is the name that does about 2,700 contracts a day, doing nearly 9,000, so about 3x their ADV here today. And about, about 19 to 1 calls over puts. That should show you some indication of where our attention was drawn today. In particular, looks like we're talking a lot about rolls on the last show. Going to kick things off once again in roll territory. This time looks like a July 48 AUG 50 roll call spread going up, doing it for a nickel. So looks like paper selling the AUG 50s and then buying back the AUG 48s. Again, doing that for a whopping nickel. Doing it, like I said, two big chunks over there on the ISE. Started off with about 4,000. That seems to be about the total. A few hundred more contracts have come in on the July since then, but pretty much about 4,000 on this spread. Looks like it's closing in July. There is some size open interest in July, about 5,300. There's also about 3,300 open on the AUG 50s. So there's some size paper on both of these strikes. Not enough to cover any open interest here in AUG. So he's not like he's closing on the AUG leg, but still interesting stuff. Our friend here clearly doesn't want to give up the ghost just yet. And he's okay with dumping out some shares at the 50 handle. And for the next month, he's willing to take a whopping nickel to do just that. Looking back on the year that was here in CAG, and this thing has certainly flirted with the much lower levels. It was trading back in January about 10 handles lower, right around 38, 39 or so. So this thing has seen much lower levels and has been on kind of a slow and steady march north ever since not that long ago, actually, about a month ago. Actually, not even. Yeah, about a month ago. It was trading right about 45 or so. So this thing has been slowly making its way to the north. So if our friend was right in the 48 handle, he decided perhaps not yet. Now is not the time for my stock to be called away just yet. I want to roll up and out to the AUG 50 handle. Is that your take as well, Mr. Rock Lobster? Are you also feeling that this is perhaps a stockholder, or is this someone who just likes himself some call spreads?
I think this is a problem that a lot of people are having right now is they wrote some calls thinking this market rally's over. They're going to collect the call premium, and now everybody's got to deal with, calls that are getting to the money or close to the money, and they're just saying, you know what? I'm not going to fight this and I get run over. I'm just going to I'll accept the fact I'm not going to make anything on this sale, and I'll try another sale. So I think you're going to be seeing a lot of this, to be honest.
Uncle Mike, if you are indeed back, this kind of forays right into what you were talking about last strategy block. Actually, you're talking about using call verticals rather than just covered calls. But this is kind of a common refrain. When should I roll my covered calls? When should I let my stock get called away? What's your take here on our friend deciding to go up and out and doing it for a whopping nickel?
Well, for a nickel, it kind of makes you think it's probably not going to be too much of a big deal either way, I guess. A nickel is a nickel. So I still stand by what I was talking about last week. The best way to get out of a double chicken wing is to not get into it in the first place.
You and your wrestling analogies and your hacksaw Jim Duggan love. That's what you guys do out there in scenic and lovely St. Charles. I think we got you back now. We'll see if we can keep the Skype lines open out there to St. Charles. I know you have the one internet line, and it sounds like someone else might be trying to dial as well. So we'll try to make sure that the rest of St. Charles can get the internet too. As we move on to our next, this is actually a newcomer here to the old odd block. This is HollyFrontier Corp, ticker symbol QZX. No, I'm just kidding. It is HFC, very appropriate. Closing just a tick under $25, $24.98, up about 60 cents or about 2% on the day. This is the name that does about 3,500 contracts a day, so pretty decent odd block paper. Doing about 33,000, nearly 10x on the volume today. 13-1 calls over puts. Yet again, it is the call love that draws our eye. This time out in the August expiration cycle is where you will find this paper. And listeners, if you too scroll out to the AUG expiration cycle, you'll see it kind of just jumping off the charts at you right there. It was the AUG 24s that were lighting it up today out there to the tune of some size. It started off with a huge block, just about 10,000 of these calls going up. Paper buy-in for $2.10 over there on the Philly. As the day went on, another nearly 6,000 going up total, just a tick under 16,000 on the day. So this is interesting stuff. Size paper already open on this strike. There's 13,500 contracts opening. So first blush, when we saw that 10,000 lot, thinking maybe it was closing, but the additional paper pouring in, clearly opening here. This was a strike du jour. Also 2,000 of the puts going up today, AUG 24 puts. So AUG 24 was where the action was. Like I said, the stock up 2% today. So not a bad day here overall for HFC. This is the name that was considerably higher about late last year. This name has pretty much been cut in half, or actually more than that, given today's rally, since that level. Trading about $50 back in November, getting down as low as about 22 recently before bouncing back. And our friends here are clearly drawing a pretty big wave of enthusiasm here for HFC, saying, yeah, I think there's more good days ahead. Certainly more risk to the upside, or more opportunity, I should say, to the upside than risk to the downside here on these AUG 24s. They're thinking HFC has a little bit more upside to go. If you're wondering what the heck is HollyFrontier Corporation, they are an independent petroleum refiner. I don't see a lot of those floating around, so that's kind of interesting. And we couldn't do an odd block these days without some sort of energy overlay. So there you go, Mr. Rock Lobster. What you call here? Size, money, loving all the AUG 24 strike here in HFC.
I would say that you've got a market. You have a market at, as Mike Tusaw would say, all-time highs, and you still have the oil industry. It reminds me a lot of 2000, right, where oil was kicking around. Hard to believe, but it was what, like $18 a barrel? I know that's inflation. That's real dollars back then, and inflation adjusted it should be worth. But we're probably inflation adjusted not very far away from that number. So people are looking at this and saying, well, the world's not really using less oil anytime soon, and they're starting to fish for some of these companies. So a lot of them, amazingly enough, Exxon is one of the few oil companies that is not very far away from its like a recent high. I think the high for Exxon was like 110 or something like that, 115, and it's back in the 90s, I think. So I think this is bottom fishing action to me, because the stock's pretty close to lows, and it's large. It is large bottom fishing action. That's and I think an August call, it does not look unreasonable, but it's certainly not. It's not a cheap call either. Just some juice.
Those are some juicy calls. Yeah, you're right. $2.10. Not often we see people piling in for 10,000 plus of multi-dollar calls. Usually they're 15, 20, 30, 40 cents, something along those lines, not the multi-dollar level. So interesting stuff. Some size money going to work here in good old HollyFrontier Corporation. We're going to bring it home with a name we've talked about once or twice here on the old odd block. This is Credit Suisse, ticker symbol CS. This is an ADR, if you weren't familiar with that. And this closing today, about $11.30, up about 40 cents, or about 4% on the day. So pretty decent rally over there in good old Credit Suisse. This is the name that does about nearly 7,000 contracts a day, so pretty decent paper, certainly from an odd block perspective. And today doing just a tick over 20,000, about 18-1 calls over puts. So if you're wondering if we can keep the trifecta alive of call love, then yes, we can, is the answer, to the tune of some size upside. Lighten it up here in September. Scroll down to the SEP expiration cycle, listeners. You will see these bad boys jumping off the page as well. It was the SEP 12s that caught our eye, with about an opening print of about 8,500 going up. Paper buy-in for 65 cents on the Philly. As the day went on, nearly 2x going up to the tune of about over 14,400 to be precise here on this strike. All of that an open interest of south of 900 contracts. So clearly this is opening paper. We saw these things rally or offered a bit at 60 cents for a while as that early spike in the stock kind of faded, but they went out 60 bid at 65 cents. So clearly they were loving themselves some of these calls. Kind of an interesting play as well. We're seeing kind of earnings kicking it off this week for the financials, so a lot of interest in financial names right now. And looking back at the year that was for Credit Suisse, surprise, surprise, not the most banner of years for them. They were trading towards, about a year ago, they were trading nearly 3x where they are now. They were into right about at the low 30s, and right now they're hovering, like I said, about $11.28. So they've taken it on the chin quite a bit over the past year, and kind of a similar story to our friends out there in HollyFrontier. People here saying, you know what, this far, no farther. I think this time we're going to see a nice bounce here in Credit Suisse. Give themselves a little bit more time for it to play out here, going all the way out to SEP, and nowhere near as meaty. These are a little bit out of the money calls. They're not $2, just a nice 60 cents. So they need obviously a nice pap to about 12.60 or so for these bad boys to start making some money for them. But still interesting stuff here nonetheless. Call Love will run with this one. We're getting some people here on the this actually goes back. Looks like a couple here, Mr. Rock Lobster. This is about the HFC call buyers. We got some tweeters, or I think these are. I can't tell where this is coming through. It's just getting piped to me through our feed here. We have. Do we think HFC will drop a little tomorrow, or keep going? Interesting question. Our friends here certainly don't hope it doesn't drop. They piled into massive OG24 calls and paying $2.10 for the privilege of doing so. So clearly they don't think it's going to drop. Whether we think the underlying is going to drop, I don't know. Mr. Rock Lobster, we don't make a lot of underlying calls here. But that said, what are your thoughts first on this size block here on Credit Suisse? And then if you have any ancillary thoughts here for HFC, have at it, sir.
Just this again, you've got a market at all-time highs, and dollars are going to start flowing into things that are at all-time lows. And this HFC is one of them. Is it going to go up tomorrow? I have no idea in the world. Although this August call buyer, I mean, they're $1 in the money. They're looking for some, probably a move back into the 30 handle, something like that. Credit Suisse, I think a big part of the problem was everybody was worried about the derivatives some of these guys had on their books. They didn't know what was going to happen. And because a 10% currency shock like that usually blows funds sky high. So, if Credit Suisse can, I guess if they've managed to get out of this unscathed, again, you're getting a huge bank franchise for not very much money. So, both call purchases look reasonable, I have to say.
A lot of people getting a jump on the mail block here with their questions and their comments. This guy saying that he's bullish on oil unless the dollar tanks. Well, okay, that could certainly be. He's clearly in the same camp as our friends over there on HFC. Since we're getting so many questions anyway, we might as well close out the rest of the odd block here and keep on rolling right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, it's Thursday. You know what that means. It's time for you guys to fire off with your questions, your comments, take the reins, easy for me to say, and drive the show wherever you feel like it. It could be silly, could be fun, could be weird, could be complex, could be all of the above. Let us know. Hit us up all of the ways you like to do it, via Twitter, via Facebook, via the website, via the Mixler app if you are tuning in live right now, or via email the old-fashioned way, questions@theoptionsinsider.com. You go the latter way, though, probably going to be on a later show. Probably won't have a chance to roll it in for today. All right, let's see how many we can get in today. Uncle Mike and the Rock Lobster, put on your answering pants. It's that time. Let's start off with, here we go. This one comes from, this guy's written it before, Dmitry Shesterin. Easy for me to say. He says, what happens to leaps for tickers that get delisted before expiration? Interesting question. I guess it kind of depends, first off, on why it gets delisted. If you have a typical corporate action where a name gets acquired by another name, then they're going to go out at a certain acquisition price, and your options are going to be settled out. That stock's going to go away pretty much at that price. So your options will be settled out according to that. So if your leaps are out of the money calls, for example, and you have a 50 call and the stock goes out at 42 through an acquisition, guess what? Those calls are going to go away, not have any value on them. If it goes away kind of the old-fashioned delisting way, where it kind of just depreciates to nothing until it gets pretty much delisted for that reason, no value, then it's probably not going to be much of an issue for you anyway, because all of those calls, unless you have some deep in the money puts you want to get access to, aside from that, that's pretty much the primary way a lot of these names get delisted, and those kind of just fade away into nothingness. So most of your out of money calls, again, kind of worthless. That said, I don't know, Uncle Mike, have you ever Have you ever encountered any weird scenarios here where an underlying is getting delisted and you're sitting on some options positions and trying to work out the nuances therein?
No, thank God. Every situation's different with something like that. So just like we tell people all the time, just call 888 options. And whenever if you do ever run into a situation like that, those guys over there are the best and they can help you quite a bit. I think are mini options for some of the leaps, are they still around right now? That was the other thing I was thinking of when you first brought that up.
I don't know if they ever listed them that far out, did they? I think they had kind of like front month and a few months out on the minis. Did they go that far out to leaps? Did they have mini leaps?
Not sure.
Because if they did, then those still exist. Those still trade. Because it's not like he's asking if the underlying kind of gets delisted. Then obviously Apple is still trading. Yeah. So it's kind of a bit of a different scenario. So I think what they're doing with the minis is they're just not listing any new ones. So as they expire, they don't replace them. So they're kind of going away that way. I'm pretty sure most of the minis have gone the way of the dodo. Maybe there are. I'll have to go dig. Here you are answering a question, the other question, Uncle Mike. I'll have to go dig around and see.
I'm just seeing. It looks like January. They do have some January minis on Apple, it looks like.
Really? Oh, so there you go. So there are still some minis alive and well, and I'm sure they're very tight and liquid. Those minis out there. But yeah, interesting stuff. I don't know, Rock Lobster. You traded in just about every pit except for the FCOJ in your 9 decades of trading. What any weird scenarios of delisting you've encountered?
So recently, actually, remember there was, I'm going to say like 4 years ago. Some of those Chinese equities coming to market, maybe a little hasty, and their accounting was not quite up to the requirements, and there were several stocks that got suspended, actually. One that comes to mind was Puda Coal, which apparently was a perfectly good company, except they wouldn't file any accounting records, and they got delisted. So the SEC basically held everything, and then after they actually delisted the stock, and they ended up doing a closing mark for wherever the options were. So if you're long puts, you did well. If you're long calls, they all went out to nothing. So it depends on what and when the relisting comes back in, but you could actually look on the OCC website about delisting options. So it really depends on what happens with the underlying. In a takeover, some cash settled and some cash takeovers, out of the money calls just go to zero. So even if you have a leap, and the leap is above the takeout price, all that stuff goes to zero. So again, it's depending on where the OCC and the exchange, they close or they delist the stock, and it has whatever the final print is, and that's where everything closes out, and then it's no more.
That's kind of why it's kind of hard to give kind of blanket advice on these kind of scenarios, because there are so many different ways that these delistings occurs. We just gave you a few examples of them. At the end of the day, Uncle Mike's advice is solid. If you have a question, contact the folks over at the Options Clearing Corporation. You can call that number. Just go onto the website. If there's some weird corporate action or something, they'll probably have some sort of circular about what's going to happen with those options. So they'll clarify it for you, because at the end of the day, they're the ones who make the decision. So contact them, and they'll let you know how that stuff's going to play out. It is funky. And if you're holding on to some old school leaps on some delisted name leap calls, hoping that they're going to come back and pay off for you someday, well, you can let those bad boys go. All right, let's move on to question here from Mark Davis. Good name, I like it. He writes, it suited me well over the years. He writes, hey, hello, I'm a new listener. Well, welcome, Mark. He goes on to write, there was a mention of using covered calls to generate a quote. He puts it in quotes. I like that. Quote, dividend, like we're teasing him or something, with faux dividend. I'm having trouble tracking down more information on this. Being still new to all of this, I am hoping to get a clearer picture of how it works. How far out on expiration should I look at? Not much punctuation there. How do I figure the strike price? Thanks. This is kind of I think this probably goes back to a show we did about a month or so ago where we were talking about writing covered calls on names. And I talked about using it to kind of generate your own dividend income stream. And maybe Maybe I shouldn't have said that because that seems to have blown a lot of people's mind. We got a lot of email and responses in the wake of that saying, what is this income? What is this dividend thing you're talking about? How can I make my own dividend? Even though it is effectively the same thing, you're generating an income stream on a name. It is not a dividend in the traditional sense. So if that's what's confusing a lot of people out there, I know some of you were, you can just think of it as an income stream rather than a dividend income stream. If it makes you feel better because there's no guarantee from the company or anything along those lines. But that said, this is something we talked about a lot. It's a very common use case for writing covered calls as a way to boost your returns, get a little bit of extra juice, a little bit of extra income out of the names. I won't say dividend, a little bit of extra income out of the names that you're working on. This, there's so many different ways to skin this cat, even more than the delisting issue. It depends on, obviously, your outlook on the underlying. If you're along this underlying and you're super bullish, you think it's going to rally a ton in the next month or two, you probably want to be a little bit more circumspect with your call writing, unless you want to give up all that upside. So you probably want to write, who knows, 5% out of the money, maybe a little bit farther out. In terms of if you're thinking it's going to kind of vacillate for the near term, you don't mind maybe letting it get called away or playing a little bit closer to that fire and collecting a little bit more to do it, then you can get a little bit closer to at the money. Some people who are super hardcore don't mind giving away a lot of their upside, if not all, like to go a little bit in the money because they get that little bit of pop, that little bit of extra juice that comes from writing options that are effectively in the put wing at that point, so they have a little bit higher implied volatility. So it kind of depends on your outlook. And in terms of how far out on the expiration cycle, we all kind of agree here that you want to keep these things close to home. You want to keep them in the front month, if not weekly, if you have the time to really babysit that, because that's where the theta decay really kicks in. If you start writing leaps or 6-month out calls or things like that, it's not going to perform as well. And if you have questions on why that is, check out some of our earlier episodes, or indeed look at a lot of the studies we've been talking about recently on this program or on Volatility Views, where they compare writing monthly calls and options versus writing weeklies, and just from a net premium harvesting perspective, how much better the weeklies outperform. Could be some other issues with the weeklies, time management, and some other issues with it. But that said, from a net premium harvesting perspective, the weeklies and shorter duration is going to outperform rather than long term. Uncle Mike, we'll start with you here. This seems to be I rang that bell with the dividend thing, apparently, because everyone's asking about this. What are your thoughts, yet again, on this whole notion of creating a dividend with a covered call and how you like to set it up? If there is one way you like to do it, or do you maybe adjust it kind of by the client?
Yeah, I would say by the client. I mean, when you say the word income, everyone seems to cling to you in this business these days, just because of the fact that we're in such a low interest rate environment. If it was 20 years ago, oh, you want income, just go buy a bond fund. It pays 9%. What's the big deal? It's just that easy. And it was back then. But the fact that we're in a lower interest rate environment, everyone seems to be clinging to want to do anything that they possibly can for income, whether it's buying junk bonds, which it's kind of concerning that we're having such a rush to, high yield bonds. It's concerning that we're having such a rush to high yield bonds just because everyone's searching for income. Now, with that, I was just meeting with another advisor a couple days ago, actually. We're just having lunch. He's a friend of mine. He doesn't do anything with options. I know I shouldn't associate with such people, but nonetheless, he's a nice guy. But he was just asking about how you can write covered calls to create income. And I was talking to him. I'm like, well, you can do that, but the issue is that right now with a 12 VIX, it's kind of hard to do. Yeah, it can still be done, but we're in a low interest rate, low volatility environment. So it's a difficult thing. So I think that what you need to do on this is if you're looking to get some extra income in some way, shape, or form, you may want to look to do some things in very hand-selected stocks like we do in the RCM triple income portfolio. Or I think you just may want to not invest for income for a while and maybe take some gains on some things that you have that have grown over the course of the past few weeks if you have been exposed to the stock market, and maybe create some income that way by just shifting some funds around.
I like Mr. Rock Lobster's joke here behind the scenes. People are buying bonds now to generate the appreciation, and stocks for dividends. Oh, how right you are. That said, Mr. Rock Lobster, any thoughts here on? You probably have a similar scenario. You kind of construct these things depending on how the mentee or the client approaches you guys at Option Pit. But that said, are any kind of hard and fast rules? I kind of just laid one out, keeping it kind of shorter term, shorter duration. But any other hard and fast rules you like to employ when creating your own personal quote unquote dividend stream using covered calls?
So you're asking me what I like to do to create my own personal dividend stream for covered calls?
Yes, exactly what I'm asking you. It's like we're a late night infomercial here or something. You too can have your own dividend income stream.
What I have found is I am very particular when I sell calls against any stock position, because I find it to be a big pain in the butt sometimes, because I keep having to roll the calls up. So with individual equities, actually what I do is, if I really feel like there is going to be something, it's mostly I try to kind of call tops with it, and I end up selling call spreads and not calls. Because if the stock keeps going up, I want it to keep going up. So, and that's called something slightly different. I think they call it a slingshot, where, you short the call spread, so it's not as big a deal if the name keeps going up. And that's the bottom line. I think if you just kind of do everything every month, it's kind of a tough gig. I think the thing that works probably better is if you're looking for that kind of income but you want to be long, it's probably easier just to sell puts, or look for better times to sell puts, because you have to be ready to sell calls. This next thing I would say is, you can't keep the term of the calls too long. You really can't go. It's hard to go over 30 days when you sell calls. Maybe as much as 30, maybe 60 tops. But that on an individual equity, and the index, it's a little easier because it's hard for the index to go up, like 4% or 5% a quarter every quarter. Doesn't mean it can't happen. It's just it's tough to do. So you have to kind of decide on also too. What's the volatility underlying. I really like to only sell calls when I think they're going to go out worthless. So, if you sell stuff that's too close to the money, that looks like it could get taken, you have to have a rolling rule. And my general rule with rolling is, as soon as the underlying gets to the premium plus the strike price. So let's say if the stock's trading $18 and I write a 20 call for $1. As soon as the stock is trading 21, I'll roll a call up. As soon as it crosses that line, I don't even think about it, because I don't want to lose the call, and I figure I'm making money anyway if it's going up. Because ultimately, what you want to do with buy writing is you want to make money every year. So generally, to do that, you got to make sure that your stock is going up and you're selling calls and you're collecting enough money to sell the calls. So one of the hardest things is just if you sell calls when the vol's like real low, like Mike was saying, you just don't get anything for them. And it's not worth selling them. So another alternative is to sell calls that are a little more in the money, and you're just trying to go for whatever that yield is. So you sell a call that generates a buck over parity. That yield might be, like 1.5%. That's what you're going to get for the month. And if the stock really pulls back, you buy the call for nothing and you reload again. So there's different ways to write calls. Obviously, we have classes on it. Again, and I think it depends a lot on the type of thing you're writing against. So generally, you can be a little longer term in indexes when the market's more volatile. I think it's harder to do that. You have to be a lot more prudent with equities. It's probably better to stick to an equity strategy where you're kind of going to assume you might have to roll your call, and you have to just stick with that rolling routine, which means you have to be on it and pay attention. You got to do stuff.
You do have to do stuff. Well said, sir. I told you once, I told you a million times, if you don't want to keep rolling every 2 minutes, you got to stop selling those 99 Delta calls. I know you like the juice, but maybe you go a little bit farther out next time. You're like, but it's $8. I just can't give it up. All right. You are a diehard addict for juice. Unfortunately, that's all the time we have for your questions. Keep them coming, though. We love to hear from you guys as we keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. And surprise, surprise, yay, it's earnings season yet again, so we can talk about real stuff as opposed to silly transaction taxes and nonsense. So, yeah, there are some names. We saw some financials coming out earlier this week. In fact, who did we have this morning? We had JPMorgan Chase before the bell here, as well as a few other. I think Delta Airlines was coming out as well. Tomorrow we have Citigroup and PNC Financial Services, U.S. Bank Corp, and Wells Fargo. So if you didn't get enough financials in your own in your trading arsenal today, then you got some more on the docket tomorrow. Hopefully you've already got some of those on, because some of those are indeed before the bell. But that said, first off, Uncle Mike, we'll start with you. Isn't it nice to be talking about earnings again? And then B, what's on your radar for the rest of this week into the old weekend?
Oh, for sure, earnings. What I'm watching tomorrow is I want to see if we get any overnight movement. Today's rally was based upon we actually didn't have a lot of movement during the day today from start to based on point A to point B. But a lot of the gains today were from pre-market. So I'll be watching tonight, Thursday night, to see what kind of movement we get in the futures, to see if Europe moves the market, or to see if maybe something early in the morning might do something to it. If not, then I'll be interesting to see what happens to end this week.
That it will, sir. Same question to you, Mr. Rock Lobster. What's catching your eye? I know you're a huge Citigroup fan, so you'll be obviously very glued to that, to the detriment of all other things, including your life, your hygiene, your children, all the fun stuff.
Yes, all that stuff. I won't brush my teeth for 2 weeks. What we have is earnings. And right now the earnings are a little better than everybody expected. So I think the financials are probably going to be, our interest rate's going to stay like this forever? No. And financials, I think, are trading at extremely low multiples. So what does that mean? Well, as long as we don't have another financial crisis where, everybody leverages up on one bad CDO, banks should do okay. If we could actually get some yield spread, they'll do better. And right now, they seem to have rationalized their way down where they can make money in this environment. So I still think banks and oil companies and mainline technology is where the value is, because they're still not very expensive stocks if you look at them. Banks aren't very expensive, and most oil and exploration and gas companies aren't very expensive either. So there are things out there to buy, and it's worth seeing what the earnings are on these things to say, wait a minute, the market might be at all-time high, but a lot of these companies can earn. Again, it's always this big wrinkle of, okay, last year it was China. Last year it was QE going away. Lots of these things got everybody rattled, but none of them really came to pass. So ultimately, what the next big wrinkle will be is how the world adjusts from this low interest rate environment, or, when people pay Germany to, Germany is borrowing money from people and getting paid, something screwed up. So maybe that's a sign to the EU and the ECB. Why don't you guys stop buying bonds? So somehow that will come unraveled. I do not know how it will be, but it will be somehow. But the worst thing that can happen is people that own bonds, again, depending on how they're buying them. If they're buying bonds on, 90, on 10-to-1 equity, because they know to buy a treasury bond, you don't need to put up a tremendous amount of margin to buy a treasury bond. If they're just buying them with cash, they go down. Some people lose some money. Some people make some money, and that's not so bad. So my only concern, as usual, is where the hidden leverage in the system is. But for right now, it looks like that leverage is not in the domestic banks, and the leverage has been pounded out of the oil and gas exploration sector. So that's where I'm looking. So we'll see how those earnings, what those dollars are actually, what those companies are actually producing now.
Thank you for that, Mr. Rock Lobster. That music means we have come to the end of yet another interesting sojourn through the world of options. But before we go, let's check back in one last time with each of my cohorts here on the old All-Star panel. See what they have cooking up that may interest you until the next time we can all gather here together around the Yule log that is the option block. Starting with you, Mr. Rock Lobster. What's cooking in the land of the pit? Give us a hint coming up on your big extravaganza in Chicago.
Big extravaganza in Chicago, our Pro Trader Summit. We probably have a space left. We'll always try to fit one person in. You might even see Mr. Longo in person. You never know. That is next week. We'll be at the SIBO talking options and investing with our clients and new clients. And also a month later, we will have a commodity and future option trading Saturday course, which will be free for all people that are Option Pit Live subscribers and above. So who says you can't get something for nothing?
Indeed. Surf on over to optionpit.com to learn more about that, or of course, just stay tuned to our show notes. Click on the link there, and you could register for that summit. If you are going to be in Chicago, we would love to see you. And Uncle Mike Tusaw, what is cooking in the realm of RCM?
Well, it's a couple things as per usual. If you are a self-directed trader and would be interested in getting a reduced commission, along with advice from Uncle Mike and the RCM team, feel free to contact me at 312-212-3531 or m2saw@rcmfs.com and buy my book. It's on Amazon. Just search Go Long, New Option Strategies for Buy and Hold Investors. $2.99. Not even the price of a Starbucks. Would love to share my knowledge with you, and you can learn what I'm about.
There you go, listeners. Learn what Uncle Mike is about and save yourself the cost of a cup of coffee. Spend it on the book instead. I think you'll get more long-term value out of that. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I thank all of you out there in the listening audience for downloading, listening, subscribing, and of course for streaming live via Mixlr. We love you guys as well. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.